You're watching today's video technical update presented by FX Times. It is Friday, March 12th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. As I've done for the past 2 weeks, this Friday's video update will be dedicated to comparing the Japanese yen crosses. This video is being produced at about 1:30 p.m. Eastern Time. Let's start with the euro yen. Remember, the euro and the pound yen pairs have been the weaker of the Japanese yen currency crosses. So here is the euro yen. As we've seen, the market has turned bearish already, and here is this week the market attempted a rally after the last week's here breakout, and this rally is now testing the previous high here, as well as this declining intermediate term moving average. So we may still have a little further rally, and if we do have a breakout of this current resistance, we still see resistance here at this 50% level, as this is the previous support here. So still look for resistance at 126.50, 127 area, even if the current 125.30 area breaks, because the market is still weak. Now look at the 4-hour time frame. We see this attempt, this rally projection, the swing projection towards, once again, a little bit above near 126. But this swing projection may be only deserving of this projection out of this previous consolidation area, and that projection has already hit the target, and you see this kind of rejection from the rally. So we do see some bearish price action at the moment, with the stochastic crossing over and possibly rolling over soon, or rolling under the overbought level soon. So we may already be into the bearish mode. Now for confirmation, you want to see this market break below this rising trend line, and if that happens, we may retest our support in the declining channel, which is this new channel here. So a decline may basically, I would look for it to retest this previous bottom, and if that breaks, then I would look at it to go to the 118.50 area. So for the bearish case, if the market breaks here 4-hour time frame, breaks below this trend line, and actually it's important to break below this 120.150 area, this previous consolidation power line, then the market is likely to continue falling to the 118.50 area, which is the 78.6% retracement of this rally. Here's the pound yen pair. It's in a similar situation as the euro yen, but is in a different retracement pattern. It's in a ABCD or a Gartley pattern, and we see that developing. Now in the 4-hour time frame, we see this projection here to the 139.50 area, which is coincident with this 200 moving average and a previous power line here. Okay, so look for topping action soon, if not the current level here at 138. See, we had this rejection, but the market continues to be bullish, so we'll see. Now looking at the weekly, further decline would mean, just like the euro, a retracement to 78.6%, and here that would make it the 130.15 area. Okay, so look for a little bit further short-term, near-term bullish action, and then look for topping action here at this previous this important power line here at 139.50, and if the market declines from there and breaks below this rising trend line, then we may have another swing towards 130.15 area. Here's a look at the US dollar Japanese yen pair. Actually, let me switch to the daily. You see, this is, we've been in this sort of sideways action since the end of last year. The market continues to be choppy. This rally currently retraced 50% of this decline, and if you use this previous decline, it has retraced 61.8%. So the market is struggling to break above that retracement level. Looking at the 4-hour time frame, you see this struggle, you see this rejection, and that's no surprise, because we are nearing this long-term declining trend line. If you look at the weekly, this is a very long-term declining trend line that the market is testing. So if the market so the market is more likely to hold there, but if the market does break above, that's a major implication in the long term. So now looking back at the daily, before that happens, we have to stay bearish, because that is the mode of the market throughout the last couple of years. So here we go. If the market here tops off, say even with a little further rally, tops off at 91.40, 91.50, the market can still continue to decline, and another leg down like this once again brings us to that 87 area. Here this swing projection as well goes to that 87 area. So that would be your target if you see topping action. So looking at the 4-hour time frame for better look, you see topping action, you see this the current. Actually, let me scratch that. This is the more important power line that you have to watch. See, the market is right now supported by these three supports, and if the market breaks below this trend line, it's also breaking below these two moving averages, and that would be a major implication of the market's attempt towards 87. So look for topping action, and look for your bearish signal to be a close below 89.50. Here's the Aussie yen. So this week the market did break this previous high and looks poised to continue towards the 85 area, or at least the 84 area, which is 78.6% retracement. Looking at the weekly, you see the Aussie yen has been stronger than your dollar, European, or pound yen pairs, and looks poised again to continue rallying. You don't have a break in this bullish mode, so Aussie yen looks like it would continue to rally, although it might see some short-term resistance at 85, and even price action shows some kind of struggle now to reach 84, 85. 4-hour time frame shows that it is overbought and there is some sort of divergence, so do expect some kind of correction to start the week next week, but look for bottoming actions as the market may be supported by this 200 moving average, or at least here at the let's do this. If there is a correction, we still may see some support here at 80.50. Basically this previous resistance to our consolidation area. So get ready for further rally if there is bottoming action there. And finally, we have the Canadian dollar Japanese yen pair, which has been the strongest recently, but as we see in the weekly, it wasn't as strong as our Aussie yen historically in the past year. See, the Aussie yen has been very strong. Instead of that sideways consolidation, it has been ranging upwards. But looking at the daily time frame, we see that it's completed this bearish Gartley, and there might be some short-term reversal. However, when we look at the bigger picture here, we see a possible swing rally towards 94. So first we have touched the 89.50 and due for a little bit of correction, but ultimately we still have a bullish outlook towards the 84 area. I mean the 94 area here. That's it for this week. Visit fxtimes.com for more fundamental and technical updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you a great weekend.